Hello traders, Jason here with SwingHigh.com. It is Monday, November 30th, 2009. This is your post-market analysis. It's about 4:10 right now. The market's just closed, so the month of November is in the books. Let's look at the daily action. This morning we pretty much we rose and we found some resistance at 110 like I said earlier, and then some support at 109, and that proved to be the support for the day. And basically we stayed inside this 110 to 109 range all day. Even at the end when we were looking like we were going to break out above 110, there was some massive volume stepped up, definitely compared to the rest of the day, and basically just pushed us right back below that 110 mark. And then after hours here we saw almost a retest of the 109 area down here to 109.13. So that's for SPY. For the day, up 0.3%. The diamonds up 0.4% almost. The NASDAQ up 0.1%, which is a nice recovery from its relative weakness earlier today. It's still relatively weak, but at least it finished positive. The Russells up 0.9%, so nice big rally in the Russells, especially starting around 3 o'clock today. So I guess that was about the time when Dubai worries eased. I'm not too in tune to all of the news that's floating around, so I'm not even sure what's going on with Dubai. I'll look into it a little bit, but it's not always that important. As you know, there's news every day, and markets react irrationally every day to most of the news because most of the time the news doesn't matter. That was a short little rant for you. Here are the financials. XLF up 2.6%. Wow. Big move up in the financials. So there you have it. That's the day. So it looks sort of bullish, but keep in mind there are some things we have to look at here. On the daily chart, we are still under a major resistance at 110 on SPY after a big gap down last Friday. Last Friday's volume was really light, so that gap down is not too significant. In fact, you'll notice that during the past couple of weeks, during this very choppy sideways move, we have seen very little volume. So waiting for volume to pick up before we see what happens. And yes, today was up. Ignore most of this lower candle. I think that's a misprint. But despite being up today, keep in mind that 1 or 2 days does not make a trend. You need much more continuation in either direction to get a trend. To my eye, I'm still seeing a high base consolidation here on the daily chart. That means we had a run up and then we chopped sideways, which is a high base. Let's look at the weekly. We did close out the month, so I'm going to ignore that last candle on the weekly a little bit right here because we just started this week. As you can see, the weekly, we do have the sort of a high base. We have a run up here, slight pullback, and then this high base formation, which is sideways chop. This teal line, that comes from the monthly. This monthly is a very big downtrend that we've seen, and right here for the month of November we have broken above that, and you can see that on the weekly we are above that, and on the daily you can see how we are breaking out of that slowly but nicely, technically speaking at least. Let's look real quick at the SPX because it's a little prettier. I have two downward trend lines drawn in here for the monthly. One goes from these upper tails, and for the bears, for the monthly at least, they really needed to keep the price below that that upper trend line at least, which could have been done today, but it didn't happen. That would have been around the 108 area on SPY or 1080 on the SPX. There was pretty much no chance of getting below this lower trend line, which would have been very bearish. So we'll have to see how this breakout holds up for the month of December and going into 2010. So we're in the home stretch for 2009. We had a pretty good year. Let's see where the markets go from here. Thanks for being a part of SwingHigh.com, and I'll talk to you tomorrow.